This pizza is a $1 trillion company. As a matter of fact, it's a $2 trillion company. Okay, so you heard the news about a stock split. And today it's Tesla and Apple, and in the future it'll be somebody else. But take a look at this. This pizza is Apple's market cap. That means that the entire value of the company is $2 trillion. It's a big pizza. The pizza slices are shares of stock. If you want to buy a single share, you have to come up with a lot of money. So the company wants to make it easier to trade the stock so more people can buy and sell shares, so they split it. They turn one share into two or more. So what was trading as 1/8 of the company's market cap is now trading as 2/16. People who owned one share of stock now own more shares, but the value is the same as it was before the split. A stock split doesn't create any extra value. The pizza doesn't get any bigger. It's all psychological. Investors see a stock that used to trade at $500 going for $100, and the stock seems more accessible for trading. This results in more people trading the stock, and the exuberance grows from there. You sprinkle some of your dividends on top and enjoy. If you thought this video was interesting, please share it with a friend and check out the rest of my channel. Thanks very much.